Welcome back after the break. Now I'm joined by Abhijit Choksi, founder Stockify.in. Thank you so much, Abhijit, for joining the Money Show. We'll start with our viewers' query. First query is from Suresh. Suresh is a 63-year-old investor from Thane, Mumbai. Wants to know the future of the mutual fund industry, wants to understand whether this is a good time to invest, seeks a view on the current market situation, wants guidance on investing at the current level. So, sir, what would be your advice? Suresh is little curious to know about how to start his mutual fund journey and what's the future of mutual fund industry.
Hi, good evening. Yes, Suresh sir has asked a very important question at this juncture, especially where the panic is all across the world, especially a lot of uncertainties are there. But let me tell Mr. Suresh that mutual fund remains the most simplest and the most regulated and transparent way for Indian retail investors to invest right now, especially if they want exposure in equity and debt. Now, talking about especially in India, we are right now at a inflection point. So this is actually the time to start betting on India. All the global markets are peaking out. We are looking at US economy is going through a lot of trouble, but India is a sweet spot, and FIIs are also gradually coming back. So if you have a next 10 to 15 years vision, this is an excellent time to start your mutual fund journey if you have not already started. And either you can go an SIP way or do lump sum, but make sure that you start with at least 10 years of vision in mind. I think that would be great. And if he has any other question, please let me know.
Do you think isn't it late for Suresh to start his equity investment journey at the age of 63? Because generally in equity, we advise investor to stay in for 8 to 10 years to experience the magic of compounding.
Absolutely. Yeah, especially with age as the side of Suresh, I believe that uh, even though he has not, if he has not has zero exposure, at least some exposure he can have, but ensure that he has all the basics in place, like the emergency fund should be in place, his retirement should be, that is not clear from the question. So my point of view is from next 10 years point of view. However, if he does not have his emergency fund yet sorted, or if there are lapses in the retirement goals, then he should first focus on that and then focus on equity.
Moving on, next query is from Pradeep. Pradeep is 43-year-old NRI based in Dubai, investing 1 lakh per month through SIP. Also invests in US ETF. Current portfolio value is around 40 lakhs. Want to build a 15 crore corpus in 17 years. Wants a review of his existing portfolio. Wants to know what to do with inactive funds. Pradeep's SIP is Parag Parikh Flexi Cap for 15,000, HDFC Flexi Cap 15,000, Nifty, UTI Nifty, Next 50 Index 20,000, Axis Mid Cap 10,000, Tata Small Cap 13,000, SBI Small Cap 7,000, and there are few other investment also. And he wants to review his portfolio, and there are lump sum investment also by Pradeep. And in the lump sum investment, you can see it's flashing on screen, and want to build a 15 crore corpus in next 17 years, because he is presently 43-year-old, and he may be planning to retire at the age of 60. So in 17 years, he want to build a 15 crore portfolio. Present value is 40 lakh only, but a lot of investment, a lot of SIPs are there. So Abhijit, what would be your advice for Pradeep Kumar?
Right. So as I can see, Pradeep sir has a very well diversified portfolio. So we'll answer his question in two parts. So let's first focus on his goal. So his goal is to reach around 15 CR in the next 17 years. So 17 years is an excellent time frame when talking about equity investments. And now let's say if he is continuing with just 1 lakh SIP without doing any step up, then he will fall short of his goal of 15 crore. But just by adding 10% step up, he can easily reach nearby his goal of around 15 crores. So that is one established. Now let's focus on the portfolio mix. So I have studied his portfolio and I believe that the portfolio is a bit more heavy on small and mid caps, especially when we are assuming here that the retirement goal is on cards. Uh, I would suggest Pradeep to trim a bit exposure from small and mid cap and reinvest in large cap or flexi cap fund, which also provides equal large cap weightage. Other than that, as he has specially asked what to do for inactive funds, absolutely you should just switch them, just exit them, don't leave them idle, just replace, exit, and then reinvest them in either a large cap or a flexi cap fund. That will also make your portfolio more balanced because right now I can see is only Nifty 50 is giving an anchor of or some exposure to large caps. That is one thing is missing. Overall, because we have more than 10 plus holdings, I'm suggesting it to trim it down, like club the similar funds, like you have Tata small caps and SBI small caps. Instead of having two funds of the same category, you can choose one and consolidate your overall portfolio to a maximum 4 to 5 funds. Thanks.
Maximum 4 to 5 funds. It's a advice for Pradeep Kumar, who is an NRI from Dubai. Next question we have received from Denny. Denny is a 36-year-old investor from Kottayam, investing 80,550 rupees per month across 7 funds. Current portfolio value around 25 lakh. Annual step-up SIP is of 8% and investment horizon is of 15 years. Goal of 6 to 7 crore for house and retirement. Want to know if he is on track or not. So, Danny is on track or he need to do some changes. What is your advice, Abhijit?
Right, so I have good news for Danny. Danny is absolutely on track. Let's first talk about his goal. So his goal is to reach around 6 to 7 crores in 15 years. If he goes consistently with the existing SIP and just add a 10% step up, his goal is easily achievable in the next 15 years. And also the allocation wise, also I find it's very well balanced. A mix of large cap, flexi cap. It's a very equal weightage he has given, which is really good. Very disciplined. Also, he has given some allocation to gold, which is also what we suggest to all of our clients to have some 5 to 10% exposure to a defensive asset. It acts as a hedge in your portfolio. In case of Danny, the only suggestion I would tell him to do a bifurcation of goals because as I can see, he has one goal which is he needs for house, which could be considered more like a near-term goal. So the strategy for that would be different, and the goals which are more longer term in nature, like retirement, the strategy for that is different. But other than that, excellent allocation, and he's on track to achieve his goal. Thank you.
He is on track to achieve his goal. Abhijit, for first-time investors, what would you always suggest? Start with a flexi cap fund or multi-cap fund?
So I would, for the new investors, I would suggest a flexi cap fund because it has some exposure of, in fact, a good amount of exposure is in large caps. So which is more on the conservative side. So that is something I suggest. But it more depends on the age factor. What are the goals? Accordingly, we can guide him better.
On goal and time horizon, so according only guidance can be given. Moving on, next query is from Oommen. Oommen, 47-year-old investor from Changanur, want to retire at age of 60, has 13 years to build the retirement corpus. Retirement goal is of 5 crore. Want to know how to track progress. Need a roadmap for SIP and asset allocation. So, what's your advice for Oommen?
Right. So, as per the details shared by Oman, what I can see is that he has 13 years on his side, and his goal is to achieve 5 crores. Uh, the goal looks achievable. If so, for that he just needs to do 80,000 per month of SIP if he's able to make it, and then just add 10% step up every year. Gradual step up route will lead to his goal without any. It's just that he needs to be consistent every month with the SIP amount. Now, structurally, let me tell him to divide his portfolio in these four parts. Flexi plus large cap could be almost 50%, which can act as an anchor to his portfolio. 25% in a good mid cap fund like ICICI mid cap, he can invest. 15% of the exposure he can invest in a small cap fund like a Bacchus small cap would be my suggestion to him. And rest 10% he can invest in a hybrid fund, which
So
can provide.
Abhijit, I will stop you. I want to take one more query because I don't want to disappoint our viewers. So last query, make it quick. We have only 1 more minute to go. The query is from Rachna. Rachna is having a 29 lakh mutual fund portfolio, 38,000 monthly SIP, investing across 6 funds, planning to start SWP after 5 years. Want to know if portfolio changes are needed. So what would be your advice to Rachna?
Yeah, just to quickly tell Rachna that she, in next 5 years, she can have almost 80 to 90 lakh of a strong base for her retirement. So she can, and then after that, she can go for a 6% SWP. So which will give her almost 41,000 per month without eroding her capital. More or less, it will be largely intact. And there are a few overlaps in her portfolio. So to her also, I'll suggest the same that consolidate the similar sounding funds like Flexi and Nippon Multi and PPFS Flexi, she can merge and then reduce the number of stocks. But overall, a good plan.
Thank you, Abhijit. We are completely out of time, but thank you so much for taking all our viewers' query and suggesting them how to make their portfolio different and to get a maximum return. So that's a wrap on this edition of The Money Show. And thank you so much for tuning in. Thank you so much.